I think we're going to bring Lexi in and discuss some fundamentals instead of looking at the FTSE. How are we going, Lexi?
Great, doing great. All right, so interesting thing. I do like your bit about Australian dollar weakening. Or strengthening, because I was actually going the other way, I think, for the past 2 weeks, but I did see a difference, so I guess that's where it's coming from.
Possibly, yeah. I mean, the thing with this stuff is that it sort of just adds to the picture, it really will depend on what the fundamental drivers are. But March is big, isn't it? I mean, March is the big month. We got central banks right across the board suggesting what's going to happen to interest rates, and the COT data is really suggesting right now that we're not ready to jump, one side or the other. That they still seem, as you say, they're still quite positive on the Australian dollar at this point. They're not hugely negative on equity, so they're not really suggesting an out-and-out rout just yet.
Yeah, that's really interesting. So I think across the board, I'm just going to flash the screen and just going to take a look at some of the interest rate differentials that we already have and which economy has already adjusted and who are we waiting for, right? So let me just my mouse. All right, so I like to use trading economics. It's has all the data over there, and what we have is, I think the US has been talking about it for a long time. It has not done anything yet, but who has already shifted their interest rates was, I think, the UK about 1 or 2 weeks back, if I remember correctly. We have Australia still unmoved. What I do like is the Kiwi, actually. All right, so if I go all the way down, you can see the Kiwi is currently 0.75%, which is a really interesting thing. So last week, we were a little bit more bullish on the Kiwi because I think it has the highest interest rate differential among all the economies. All right, so I'm sure the strength of the Kiwi is already priced in, but what I do like to look at as well, it's inflation, as well as its unemployment figures, all right? Because when we look at inflation, I'm just going to do a quick comparison to the US inflation rate. The US inflation rate currently is about 7.5%. Jobless is at 4%. So if we have a 7.5% inflation rate in the US, jobless rate of 4%, okay, what I kind of figure out is, again, when we are trading fundamentals on the short to medium term, what I'm looking for is, I'm not looking to trade every currency against each other. I'm looking for the strongest potential with the weakest potential, and that is the one that will give us the most or the most moves in that sense. So if we look at something like the Kiwi, it has a 0.75 interest rate compared to the US 0.25. We have a 5.9% inflation and a 3.2% jobless rate. I would say that New Zealand has a couple of factors, right? It has already increased, has the confidence to increase its interest rates. It's got a high enough inflation to indicate there is productivity in the country, in the economy. It has a relatively controlled jobless rate, which means that it looks like New Zealand has kind of got it okay. I mean, probably Julian later on can share with us about how it's going in New Zealand, but it looks to me like New Zealand's statistical numbers comparatively are doing pretty okay. I would like to compare with Australia, and Australia only because it has a lower interest rate at the moment. So if we have Australia over here, you can see its interest rate is 0.1%, 0.1%, 3.5% inflation. Okay, so I'm just going to do a 3.5 inflation, which is lower than New Zealand's, all right, but a 4.2% jobless number, which is higher than New Zealand's. So just based on this comparison, I mean, at the back of my head, my question mark would be, it hasn't increased interest rates. Its inflation is not as high comparatively to the rest of the world. All right, like even the UK has 5.1%, UK 5.4, Euro 5.1, UK 5.4, and the UK, what I like about the UK, a little segue here, it's also got I would say a controlled, jobless number. I think anything nearer towards its historical median in this COVID environment is controlled. It's not too high, not too low. It's controlled. They're working it out. They're getting somewhere. So Australia has a 4.2%, higher than New Zealand. But if we go in, I'm going to click in and look at its jobless figure. I would say it seems to have its jobless rate controlled. So the question mark is, if they seem to be controlling unemployment, where's the interest rate move, or when is it coming? And where is its inflation figures? Are they having enough productivity to give that productivity boost to the economy in that sense? All right. And this is probably why I was kind of bearish on the Aussie for a while. And what I'm looking forward is, Aussie still has 0.1% interest rates. And because markets are a little bit more reactive at this point, where it's very sentimental based trading, my next question is, will they increase interest rates? Because comparatively across the board, they're in the lower tier. Right, not including Japan, which is minus 0.1, Euro, which is at 0 for the longest time. So it's 0.1, which is the lowest comparatively among the UK, the US, and New Zealand, Canada, etc. So the question is, I will only probably be interested in a bullish Aussie dollar a little bit more confidently when they start to have some news coming up that says, okay, they might consider pushing interest rates higher, which I don't think they will, because their inflation rate is not high enough to be alarming at this stage. Right. If we look at the US interest rate, it's almost at an all-time high, 7.5%. So they are very worried about it. I'm going to go to a 10-year. So it's the highest it's ever been for the last 10 years. If I go to the 25-year mark, you can see the only time it's surpassed that 6-7% period was in 2008, 2009. I think this is almost when the last, just before the last big financial crisis, right? So it is a bit worrying right now because it is meeting inflation rates at all-time highs. And the question is, what's going to happen next? Will this affect monetary policies, fiscal policies, and what is the government going to tackle to focus on? Is there a reason why the US hasn't launched its interest rate increment yet? They've been talking about it, but it hasn't come out yet. And how much interest rates increment can they do? All right. The last time in, I think 2015, 2016, when interest rates have started to go up, they progressively actually increase interest rates like four times a year. Right, almost every quarter they increase interest rates by about 0.25. Will it happen this year? So I think March will be interesting for us, because I think March has a potential. It's a potential period, almost end of Q1, whether or not the US will finally tell us, okay, we are confirmed, we're increasing interest rates another 0.25. So until then, I'm still bullish on the US. However, despite its slow interest rates movement, and one reason for that is actually pretty simple. The S&P is at its all-time highest for I think almost quite a long time, and in the recent, this is a daily time frame for the S&P. All right, you can see the S&P has come off very, very hugely from a 4,800 is tested the 4,002. Where is it going? It still looks a little bit bearish. My question mark is value of currency. Two things: supply and demand, in a very easy, more direct way to think about it. If you want to buy stuff, you want to buy things in the stock market, you want to buy commodities, you want to buy oil, you want to buy gold, what do you need? You need US dollars, because that's the internationally traded currency. So if price of oil is going up, what do you need to buy oil, right? US dollars to buy oil. If you want to get in at stocks, so if people think these prices are value coming back, if they think stocks are cheap, they want to buy stocks. I'm not sure whether it's a good thing to do it so, but you need US dollars, right? And if you are selling your stocks because you're not sure whether or not the stock market will still continue going up, what you're going to do, you will want to hold US dollars. You might convert your stocks into US dollars. I don't know, but I'm not giving up on the US dollars yet, because I still think there's a demand for the currency at this point. All right. And I think that pretty much concludes my section today. I'm still a little bit bearish on the Aussie, but eyes on the market, waiting to see what comes out first, because last week we had three, we had a very big retracement towards the upside on a lot of the Aussie pairs. And just scrolling through, you can see they had quite a number of green bars last week. All right, and my question is, will they continue showing me green bars next week? I'm a bit more inclined to be short on the Aussie, bullish on the dollar, a bit bullish on the Kiwi. But other than that, just wait and see, keep an eye on the news, and trade your strategies, trade your technicals. I think you guys will be fine.
Cheers, Alexis. Thank you very much for that. So a little bit bearish on the Aussie, a bit bullish on the US and the Kiwi. Is that right, Alexis?
Yes, correct.
Where's the table that you share with us, Alexis? Where did you get that from?
This is from Trading Economics. It's a free statistics page, and if you pay a subscription, you can download all its historical data.
So how much is the subscription?
I can't remember. It's quite a bit.
So what was it called again? Trading. So what was it called again?
Trading Economics.
Trading Economics.
Yeah.
I think it's always interesting. People who are learning and getting on the trading thing are always looking for resources. It's a bloody good resource too, from what I can see of it, Alexis. I'm not sure why you want to download. There's enough data there to send me to sleep. I'm not sure you have some more data to put you to sleep even longer. We see enough data just in the testing, never mind this stuff. But yeah, cool site, and certainly interesting to do the comparisons between different things. Inflation rate in Turkey, 38.69%. That is a problem, right?
Yeah, correct. I mean, if you are trading the exotics and you want to see how economies are doing in terms of its basic numbers, this is a good website for the free numbers, I would say.
Yeah, some interesting numbers there. Look at Japan, G to GDP, 266.